Hi friends, let's take a look at Link versus Bitcoin, Link versus the dollar coin. Thank you so much for joining me for this episode today. I really do appreciate it. And you know what I also really appreciate is I really appreciate our man Ekram. Where is this? See it here. Hey Ekram Karatas. I don't know how you pronounce your name, but I'm going with that. And I don't know what videos you watch either, but I'm just saying hello to you in all of them because I said I'd give you a shout out. That's great. If anybody wants to also join Ekram and become a supporter of the channel and hit the join button and all that, I guess it's basically like Patreon, but YouTube are doing it. Then yes, brilliant. You're a superstar. But let's just see instead the Chainlink price action, because that's what we tuned in for, is it not, Rocky? Yes, it is. And where are we? Well, we're still below the 50% on this Fibonacci retracement, and we're the golden pocket retrace that we came in and we achieved there in that zone has at the minute been enough to satisfy the downward price action. And in terms of 24-hour time frame, there's nothing much to really be told about anything at the minute. This came down without any sort of bullish divergence. Looking at the downside, it came down without any of the sort of hidden bearish divergence as well. Looking at the positions of these things, though, you could say a few things, such as we came all the way down to the oversold area. This looks like it's turning around and might start to cross over and move towards the top side. We'll check these things on the lower time frames in a second. You could say that the ADX is back down at this blue line here, which I've got drawn in at 40, which is obviously, as you can see, looking to the past, a crucial area for the ADX moving past it in terms of potentials for... Let me give me a couple of good examples here when I've just said this. Obviously, ad-libbing this, hoping that it works out for me as I'm saying it. You can kind of see here in this Adam and Eve structure that there was some sort of relationship there. But really kind of just looking at it as an area, if you look at the DM positive and things like that, for instance, where they've come up to in the past and then sloped towards the downside before then finding their feet, perhaps coming in around about with some sort of connection with the DM negative line. Well, we've seen all of that happen. So if this does sink towards or maintain itself in around these areas, but these two can cross over towards the top side, that would be good. Let's look down the way and put that into a bit more context. The 12-hour time frame, you can see we have snaked back above the moving average on the stochastics. I use an EMA on this, by the way. I coded this one out myself just to get it on the go. By the way, these things are available for members. If you want them, Ekram, let me know. By the way, if you want access to this stuff, hit that button. It's no big deal. There's the code there. It's not a big deal. Just wanted to have my colors and everything on there, and to make this an EMA rather than an SMA, which is cool. I actually think I've left the option on there. Yeah, so I left the option on there to have it as the standard setup, if you're interested. So I'll just switch it back around. There's the standard one. It's not quite as fast at moving around it in the way that I've got it set up just here. There's none. And then here's the RSI one. I just thought this was a bit, or the EMA one, thought it was a bit clearer in terms of how, it's blue now, we're above it, moving on the way, all that jazz. So that's the way I set that up. We're just kissing each other here on the RSI with the moving average. Can we, see this happening? If all these things do start to come together, at the same time as moving above the 50% line, moving back up to the top of this parallel channel that we had before on the charts, looking back up the way during the blue sky thinking type time frame, when I started doing them on the channel, and we drew this in back around, let's call it the start of July, when we drew this in. If we can move back outside of this area again, that would be very positive for the price action. You could look towards the 236 here. No, the 236 here that we have on the charts at that 75k area. And if we get to 75k, the next target thereafter could be 84k, where we have the 236 of this one, invalidate that, move back towards the top side, yada, yada, yada. So there'd be lots of good stuff there if that were to happen. We can also borrow that old Fibonacci from there and bring it on down the way and say, quite clearly the other thing with this 50% is that moving above it will be moving above a 236 on this Fibonacci. Okay, so that makes me look like Mr. Fibonacci over here, which I really don't like being, but I do think it quite easily draws the context for people out quite easily. And while what you're more than welcome to do is look at numerous different things when you're doing your own charting, of course you are. That's why we do this. It's kind of fairly easily to integratable modular style that'll just fit in amongst what you're looking at without stepping on your toes too much. That's the whole idea here. To do it in a FOMO-free, greed-free way as well, just to give you that consistent approach to the charts to help improve your sort of averages. But what am I talking about? There's other things you'd be looking at. For instance, this big drop-off in the VPVR. For instance, will we move up above the medium, sort of the 50% line, the neutral line on the stochastics? Would we consider this to be oversold? Well, I have it drawn in here as the bearish control zone. So coming down here, then moving back up again, as we've seen in the past, as being an area for turnarounds, which is why I coded this one to have the starting at 35 instead of whatever it is, 20 or 30. It's normally 30, I think. I had it start at 35 just so you could see it happening a bit better, or 25. I think it's normally 25. I really don't care. This is where I wanted it because it's more effective for me. I feel at the minute with the dynamic between them coming down towards the outer edge there. I don't know. It's up to you. But we've done that again now. So, we'd be looking at various different things and whatever else you might happen to have on the charts and what other channels and stuff that you're looking at and everything else. Also, is this going to turn into some sort of, did we have a head and shoulders up here, which then played out? We've been speaking about it like we did. Does it turn into one of these other ones, where you just get continuation to the downside and ultimately you look at this as being some sort of really weird, bizarre, rockety ship head and shoulders thing where we just see the market completely capitulate? Well, I would feel like, no, completely capitulate here, chill out. I feel like if we did, then we'd be looking down quite easily towards these three lines down here where we have the 786, the 886 on the Fibonacci that we're looking at, and indeed going over to the left, the 50% line, pretty common area for retracements that if we were to go down towards the bottom side. And if that happened over a period of time, then we went down to the 886, for instance, we could visit the bottom of this channel, etc., etc. So I think all of this, it's mostly the same story as what we looked at yesterday, but you'll be able to integrate it fairly well with your technical analysis, that you've done yourself if you watched yesterday's one. If you didn't watch yesterday's one, go back and watch that, and great. Then you'll know all about it. So yeah, looking at this one, this is a dollar pricing now. Then we've come all the way down here. We've moved it back up above the 236. We found that support that we wanted to find. We didn't go for the completion of this Adam and Eve type pattern to follow in with our pal over here on the Bitcoin pairing. So what we've managed to do is, maintain the support where we needed to see it. And now we're challenging in here at 745. If I just go over to the left, you can see these three numbers, 711, 720, 735. Then thereafter, you have the 740 area, 745 area we spoke about because that's where the 382 is. Moving past this line and moving towards the top side. If you were thinking about this from a sort of, we're going to keep trending down, but there could easily be fake outs and whatnot, then let's kind of just bubble it out here for us. This sort of zone here would be what you need to move beyond that to say that that's no longer happening. Anywhere in here and then back down again, of course, just simply results in being a lower high overall and having perhaps got a 618 retracement or something like that, some other reasons. And of course, we can see this on the VPVR here, having simply come up to where there was a big value area, moving past what could potentially be an area of lower liquidity. Even though there was some trading activity in here, it seems to trend right through this area to actually have a sort of consider itself a bit more really at either side of these two areas. So that's why I'd be looking towards, if we did move out past this area. And of course, that's a tradable event in and of itself. Just, don't get me wrong. Like, you're looking at just to move up towards the 50% line as being nearly 4%, and a move up to the 618 as being 8%. The golden pocket would be 8.5%. So, you really plenty trading opportunities to happen in that if we were to go up and do those things. But that's what I'd be looking at if I'm wanting to go beyond, and if I want to go beyond towards the downside, then quite clearly, the median line here at 680 is going to be something to look to in terms of the future. If we do go past this zone here at the 236, and depending on how all things work out, then you can keep an eye on all of that. The volume signature dropping off since we've been going down. Looking over to the left, the volume compared to what it was in the past, way down here, was way bigger volume, than what we're having at the minute. So it's not like we've got that this is super increasing. We've had this diminishing thing, but will we see it turn around and will then this start to go towards the top side again? And if it did, then all these things like the moving averages, or the Fibonacci, the RS to the MFI, would have found supporting at that neutral line. Will we tick back over there, go towards the top side? Found perhaps a touch of the old bullish divergence. Yep, bullish divergence here on the Well, how did I just see that and it not? Oh yeah, because I'm looking between this. But sorry, I just thought this was as I zoomed in, I tricked myself there. But nevertheless, this would be a key area to be staying above, and we're managing to do that. And that's where, if we did see the prices come down from the Adam and Eve, they could come down to here and then turn around at the $6 area where we have the 382. Spoken about that in the past. But that's not what the point in that was. I thought that was divergence, which it wasn't. Instead, we've just got this downward trend here happening. Fair enough. Since the 15th of July on the daily time frame, and we have put in a low which is also convergent with them below. But if we go down to the lower time frames, what do we see? Do we see that continuing? So that's also not divergent, right? No, there was a tiny bit of bullish divergence. Ooh, just a tiny little bit, but just was in there, just kind of starting to just throwing up that question mark about things. Well, actually, that's brought us to here, and we kind of thought that it would. We talked about the 3 targets over here anyway, and the 4th one of the 745. I'm pretty sure in yesterday's video. You can call me out if I'm lying there. I'm clear. I clearly can't properly remember. I just pretty sure we did. There's the line police coming for me now. Geez. But yeah, all it did was brought us up to this inflection zone that we knew that we would have with the parallel channel and whatnot we drew in, and that's kind of the key area. If we see prices turn around from here, it wouldn't be too shocked. Offers up easy enough to trade, risk managing your risk. Now, when it comes to managing your risk, by the way, I talk about this all the time. It's about being able to identify areas, and then because you know where they are, you're able to manage your risk a bit easier. And low risk trades come in whenever you see the price action near where one of your identified levels is, where you're satisfied and willing to back out of a trade when you kind of know, in inverted commas, that it went wrong for you. And that would be at these predefined areas of inflection points in the market. And then it kind of comes down to how good your sort of ability is at finding them. We've been doing okay on that front. What have I just opened up? Some advert. This is an advert that came up on Brave. A lot of them are on this, like world markets. Open an account, log in. Looks like a scam though. It's a really crap website. But then again, world markets, AI managed account, gold, silver, exotics. Email us. So not doing any of that. Right. Whoops. Sorry for exposing you to an extra ad there. That's the last thing that you need in your life. Cool. Yeah, what was it? Anything left to talk about? No, probably not. Just one last shout out for old Ekram here. Thanks very much. And by the way, I don't know if you're a man or a lady, because I've never heard the name Ekram before, but I'm going to go with a dude because I think that sounds like a fairly cool name. I wouldn't mind having it myself. So, if that's the thing. Whereas I probably wouldn't like to be called Sally or Tina. Right, cool. Okay, great. Thanks so much for being a member, Ekram. I'll catch you next time, and I hope that you're liking these shout outs. You can see them in all the videos today. Going to go on to look at the next coin, Tezos. Yeah, great. Catch you next time, everybody, which will be tomorrow.